All right, so as promised, we're moving on to slide number 8 on the chapter 1 PowerPoints part 2. And now we are going to be talking about the statement of retained earnings. Now, we're going to look at slides number 8, 9, and we're briefly going to look back at 7 for a second. 7 being your template for your income statement. Now, I want you to jump right to slide number 9, which is going to be your template for, come on. Of course, I'm doing some stock trading right now, and my slides are not uploading. Anyway, there it is. We're going to look at Exhibit 2 on slide number 9, and this is your statement of retained earnings or retained earnings statement, whichever way you write it, it's fine. Again, I want you to pay attention to your heading. Your heading, again, starts with the company name, and in this case, we're working with Willow Corporation. The statement we're preparing is the statement of retained earnings, as you can see there. And then again, this statement has the exact same date as the income statement did in slide number 7. So this is for the year ending, meaning it's from January 1st to December 31st. Now, before we go into what this says, I want you to go back to slide number 8 so that we can talk about what this statement actually entails. So, slide 8 starts off with the statement name. First bullet talks about it shows the changes in your retained earnings account over the period. So for it to show the changes over the period, you have to be able to find the beginning retained earnings amount. And then what you are going to be doing is updating the beginning to get to the end. Okay. So I'll point out what that means more right now. If you take a look back at your slide number 9, you'll see that the very first line under the heading, it says retained earnings. And if you take a look at the date there, keep in mind, this is an example that I need you guys to understand. This says December 31st of 2012. Okay. So this is the ending from last year. Now, you're asking me, why are you talking about the ending of last year? I'm going to give you an example of something. New Year's Eve, okay, you go to right before the ball drops. You decide that you had too much to drink. It's 11 o'clock. You have $1,000 in your pocket, and you go and you pass out in your bedroom. You wake up January 1st at 3 o'clock in the morning to go to the bathroom because you had too much to drink. And now all of a sudden it's the new year. Well, technically, as long as you're not married like me and your wife likes to go in your pocket, you should wake up the next morning with the same $1,000 you had last year or at 11 p.m. the night before. So last year's ending is this year's beginning. Okay. So if you go to bed with $1,000 in your pocket New Year's Eve, you should, and I say should, because obviously we all have those people that like to go in our pockets, take some money from you. You should wake up the next morning with the same amount of money as you went to bed with. Okay. So hence the reason why this is using last year's ending, 2012's ending. We're using 2012's ending for our beginning on this statement. Does everybody understand that drift that I'm trying to point out? Last year's ending is this year's beginning. Okay, that's very important because you're going to need to know that not only for this class, but when you move into managerial next semester, it is a topic that you're going to need to pay attention to. All right. So the first line, retained earnings December 31st of the prior year, you're going to be given that information. Now, keep in mind, all these numbers that you're working with are going to be given to you in some form or fashion. Okay. There are some numbers that you're going to have to compute, but for the most part, if you do your classifications properly, you will get these numbers that are associated with each account. On your first homework assignment that I gave you, I didn't have you prepare the actual statements. I just had you do the classifications and get totals for each one of them. That is a way for me to get you thinking in these lines. Now, if you skip back up quickly well, hold there. The next line on this statement, you see it says net income. Now, net income you get from, well, excuse me, you get your net income off your income statement. You get your net income off your income statement. So if you jump back up to slide number 7, you should realize that when you prepared on Exhibit 1, the example that we're working with, the very bottom line on there says net income was $3,950. Now, this is what I mean by you can't prepare the statements out of order. Okay? To prepare the statement of retained earnings, you need the net income from the income statement. So you have to do your income statement first to get the net income. So that net income, which you see on slide 7 of $3,950, gets brought over to your statement of retained earnings when you're preparing it. So that net income number you can see, and the line there on the slide shows you $3,950. And if you follow the little arrow down, it says from the income statement. Okay? This is the reason why we have to prepare these in order. So if you go ahead and you see that, you're going to bring your net income over. And then the next line you get is what we call our subtotal. Now, whenever you see the word subtotal or the word total, chances are you're going to be adding things together. So if you take that calculator out and you follow along the right-hand side of this statement, you'll take your $17,000 and you're going to add $3,950. And once you add those two together, your calculator should show you $20,950. So your subtotal is just simply adding the top two lines together to come up with your subtotal of $20,950. Now the next line, I want you to jump to slide 5 quick and take a look at the Alsdray situation there. So if you go to slide 5, you'll see again, we prepare them from the bottom up: income statement, retained earnings, and balance sheet. The next type of account on your list is the D standing for dividends. And that's the only type of an account that you're worried about putting on your statement of retained earnings. So you've got to find your dividend amount. That amount would be given to you. So then you're going to go back to slide number 9 and you're going to see where it says less. Now, when you see the word less, I'm not even going to go and say the word after it yet. Just the word less means you're going to subtract. So you're going to less your dividends or subtract your dividends. So in this case, the dividends that Willow Company paid was $1,500. Okay? So in your calculators at this point, I want you to take $20,950 and subtract $1,500 from that. And if you go ahead and do that, you will get an ending. Now this is, I know it doesn't say ending balance of retained earnings on there, but this is your ending retained earnings. And they're implying that it's the ending because if you look at the date here on the last line, it says December 31st of the current year, meaning 2013 in this case. So if you went ahead and you did the subtraction in your calculator, you would have come out to $19,450. Now, that's all this statement is. It's 5 lines. It's not a tremendously hard, long, exasperated statement. It's 5 lines, okay? And most of it is using just your calculator and your common sense, okay? So just jump back to slide number 8 real quick so I can go over the next 2 items. The statement of retained earnings shows changes in retained earnings over an accounting period, which we spoke about. Accounting periods can be a day, a week, a month, a quarter, half year, full year. Again, for all intensive purposes in this class, we're using the full year. Hence the reason why Willow Corporation's example says for the year ending. Okay. The second bullet here talks about uses net income figure from the income statement. Well, that's pretty self-explanatory. I showed you on your actual example or exhibit 2 where that number goes. So hopefully you now understand why it's important that you prepare the income statement first. Okay, you need the net income or net loss. If this company was having a net loss, you would just bring that number over as a negative number. So you would go ahead and subtract it instead of adding it like we did. So keep in mind, if you're bringing a negative number over, what your operation is going to be for that. The last thing that slide number 8 talks about, it says retained earnings and the end of period balance is used to prepare the financial statement, or excuse me, balance sheet. And that is key because, like I said to you, we prepare them in a certain order because every statement uses a number from the prior statement prepared. So what I mean by that is we prepared our income statement first because we needed the net income. That net income was brought over to our statement of retained earnings to complete that statement. Now, the whole statement of retained earnings, the bottom line was your ending retained earnings for the year that we're talking about. That number, that 19, let me see here, that number 19,450 that you see on slide number 9, that number is going to be taken and moved over to the balance sheet, which is the last financial statement that we're going to be preparing. So that number is moved to the balance sheet next. So now you see why we prepare from the bottom up, starting with our income statement, moving on to the statement of retained earnings, and lastly but not least, we're going to prepare our balance sheet. So hopefully you guys are following along pretty decently with your slides. I'm going to end this video here and go ahead and get this uploaded. Again, I'm doing it in 3 separate videos so that you guys all have the ability to watch the individual videos and be able to specifically target this financial statement if you have a particular problem with one of them. And again, it shortens the videos up for you guys, so you can take a 2 or 3 minute break between videos and just get your head back on your shoulders. I do know listening to videos and trying to follow along sometimes is a difficult task, but do please keep in mind that we are trying our best, as everyone hopefully is going to tell you, and hopefully everyone is actually doing their best. So just bear with us. Again, we're working just like you guys are. I keep telling my son the same thing in his class, in his remote learning class. My other son is downstate with my wife, and she's having the same problems. So this is not just something that's in particular or particular to you guys. It's at every level of the education right now. Unless your course was designed to be online from start to finish, we're going to have our little bumps in the road. So just bear with them. Again, we're here. We're trying to work with everybody. Some days are a little bit easier than others, but just keep your head up, stay positive, wear your masks. And I really want to say thank you guys, considering the information overload of COVID information coming across SUNY campuses. You guys are shining like stars, and I really appreciate that as a business owner in town and as a family man here in town and having my kids here in town and so on and so forth. It's refreshing to know that you guys are doing the right thing, and it's appreciated. You guys get a lot of slack for being so-called college students and going against the norms and things like that. But it is refreshing to know that we're 3 weeks into class and we haven't had the outbreaks and problems that other schools our size and even larger, such as Oneonta, has had. If you guys, obviously, I would hope, have heard by now, Oneonta has sent all their kids home for the fall semester after 1 week of them being in class. So it's a testament to your fortitude on how you guys are actually going about doing what you're doing, and it's a refreshing to understand that you guys realize the consequences and the reality of this. So I just wanted to point that out and say thank you guys for doing your part. Continue to be vigilant with wearing your masks and things like that. And again, I'm going to sign off here and get your balance sheet statement up. So talk to you soon. Bye-bye.